Investors are continuing to adjust their strategies as markets remain uncertain. Shifting interest rates and uneven liquidity across asset classes are all influencing how decisions are being made. Many are now reevaluating how they allocate capital between public equities and private investments, as well as other current conditions are still rewarding long term positioning in less liquid markets. To help unpack how that balance is evolving, I'm now joined by Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, thank you so much for the time today.
So great to be here, Theresa.
Now, how has the asset allocation approach shifted recently? Where are you increasing exposure and where are you pulling back?
Well, it's been interesting because we've had a crazy, what they would call a bull market, a market that just gone up and up and up despite everything. I mean, really, with a few hiccups that were largely driven by external factors, the market has kept going up really since the financial crisis bottomed out, oh, 16, 17 years ago. It's not even reasonably sane.
Mhm.
I mean, you consider all that's happened in the last while, from uh, just in the last 5, 6 years, from the COVID crisis to the Ukraine war to the Israel war to the um, the fact interest rates have more or less tripled
Mhm.
since the beginning of the decade, and yet that markets continue to rise. So the question one has to wonder is why. And I think what people like to talk about and what actually drives markets tend to be different things. So some bad piece of news could happen. The Americans could decide, for reasons that seems good and justifiable to them, to start launching missiles in Iran. And the market doesn't like that. And the Strait of Hormuz may get closed and there's not any energy to be had. And the market doesn't like that. But then after a while, it adjusts to the new normal
Mhm.
and it just keeps going on. I think the most single important determining factor to what markets are going to do is really interest rates and whether they continue to be low, and by historical standards they're still extremely low, or whether they will rise. So I think to figure out what to do, I think one first has to figure out what interest rates are doing. So we've been still very bullish about the market,
Mhm.
but for clients that have had uh, a need for cash or a prospective need for cash, um, nobody really ever got blamed for taking some money off the table, especially if you know you're going to need it in the next little while. So mostly what we've been doing for people is raising cash when they think they could need it in the next 6 months or a year. I don't think that's a bad strategy at all.
And how are you thinking about the balance between public and private markets right now?
Well, it's an interesting thing because um, everything in this world, but in the financial markets in particular, gets taken to their completely illogical conclusions.
Mhm.
Something will seem good to do because very few people are doing it. And then once everybody starts doing it, the nature changes. It's like going down a river on a canoe trip or something like
Mhm.
that. And there can be a dangerous way to go down the river and a safe way. And it doesn't matter how many canoes or boats or whatever you put down the safe way, the river doesn't change. Investing isn't like that at all. The more you put down the safe way, the more the river kind of gets jammed up and the river shifts and changes. And what was safe becomes dangerous. And what was dangerous can actually become safe. And we've seen this over the last little while in the private market, specifically the private debt market.
Mhm.
There have been a number of companies that have been heavily invested in private debt. And this really came out of the fact that some of the regional banks that specialized in the tech sector, like Silicon Valley
Mhm.
Bank, all of a sudden went bust. So there wasn't an appetite amongst the regulated banks to lend money. So then capital could step in the form of hedge funds and other private lenders and say, no worries, we'll lend you the money. But without the sort of oversight and checks and balances, but if there's some good investments to be made, good investments will be made. But then as this sector does well, people say, oh, the private debt sector is doing great. Let's pour more and more and more money into it. Well, there's only so many good deals to be done. So what has happened in that sector is there's been a lot of bad deals being done, and companies have been going bust, and loans are being defaulted on. So now there's a run on the private debt market. People are trying to get their money out. And the thing about private loans, or private anything over against the public markets
Hmm.
is that the one single advantage to the public market is that in normal circumstances, you can sell when you want to and get your money back, or at least some percentage of your money back. Private markets can go absolutely no bid. And in fact, there never is a guarantee of a bid. So what we're seeing right now is, particularly in the private debt space, a real run on that, and people desperately trying to get their money out.
And given the slower exit environment, has your view on private markets changed over the past year?
I think I think yes, in as much as I think it's probably a little early to be bottom picking for opportunities in the private debt space, but the kind of wonderful opportunity we have up here in the Great White North is that nobody's yet discovered us. In fact, there isn't, because there isn't a venture capital market. There really isn't an effective private equity market in Canada the way there is in the US.
Mhm.
So the fortunate thing is that many Canadian companies, interesting deals, have had to, one way or the other, go to the United States to find financing. Where we found opportunity is just because this is a fairly tiny market, and there's not much more than 1 or 2 degrees of separation. Some really good domestic Canadian opportunities, and we may uh, sell ourselves short,
Mhm.
but Canada's actually on the leading edge of a lot. I mean, um, we talked last week about Tetra Digital and the
Mhm.
stablecoin initiative that they had, um, uh, and whether it's uh, in crypto or in other digital types of investments, Canada can actually be on the forefront, or even U.S. healthcare. There are some interest because we can see the U.S. healthcare system from our perspective. So I think the Canadian market, from a private investor standpoint, is quite interesting because, unlike, say, as I was describing earlier, the U.S. private debt market,
Mhm.
there hasn't been a whole flood of capital, and there are some interesting opportunities that can be done on a very with very made in Canada solutions.
And would you say that you're finding better opportunities in public markets right now, or do you see more value in private markets?
Both have their place.
Yeah.
I think most investors at this point should have at least some exposure to private markets, which is just, I mean, once upon a time, very few people had even exposure to the public markets. Most people didn't have a stock portfolio.
Mhm.
Even if you don't have a stock portfolio now, most people have mutual funds that own stocks, or an electronic exchange traded funds, or some other vehicle that gives them equity participation in the growth of the companies that matter
Mhm.
in it. But private markets are different. They're not for people that need money anytime soon, but for people with a long time horizon, it has been an effective way of getting into ideas early before the rest of the world. And particularly, I mean, I've always advised my younger investors, if there's something you know about because it's the video game you play, the trend that's new, the fashion that's new, the thing that's new. I'm not going to know what's new. I'm old. So for a younger investor, if you think you find a thing that everybody of your classmates, your colleagues, your really love, find out who makes it and whether you can buy some of that, whether it's public or private. Because if that's there's a very good chance that if you're interested in it, everybody else is
Mhm.
interested in it. And if, rather than just buying the product, buying the company that makes the product can be a huge, great win. So buy the things that people are interested in. So I think both have their place. I do think, though, that the private markets have been a way that the ultra wealthy have been able to accumulate even more. We've been trying through structures like Urbana Corporation, other vehicles, to democratize.
Mhm.
Others have too. Um, and I think, to a point, that can be a very good thing for the broader public.
And do you see a mismatch between supply and demand right now, limited high quality assets on the buy side and sellers holding out on higher valuations? And how do you see that dynamic evolving?
Well, in the public markets, it's largely dependent on what President Trump tweets next. There's peace, there's war. We're here for the good of the Iranian people. We're going to wipe that civilization off the face of the earth. And the markets, mercifully, the markets have stopped gyrating to such a great effect over individual tweets because, how did Macbeth put it? Sound and fury signifying nothing. Um, sorry to have said that in a, well, it's not a theater, it's fine. But the, I think that everything to a point makes sense. I think the public markets have gone an awfully long way. I think that what you'll see over the next while is a bit of a rotation between sectors. It is rare that a market hit new highs like the market has been doing of late and then all of a sudden crash. 2020 was the only exception that I can think of, and that's because of the COVID crisis. Otherwise, it takes a long time for the market, at least several months, for it to roll over. I think what we'll likely see through the summer is a period where the sectors that haven't done as well will come to the fore. I think you'll see some industrial companies do well. I think you'll probably see gold continue to do well.
Hmm.
I think, at least I hope, that peace breaks out in the Middle East, and so that energy is probably gone as far as it can go. But I think there'll be a sector rotation within